Hello, everybody. Somebody give me a sound check in chat ask for us. Let me share my screen here. Minimize this. Take you guys over here. How are we looking? Looking good? All right, Alan, thank you. Robert, how's everybody doing? Who's in the room today? All right, let's get everybody in the room. Oh, the Zoom room. I love it. I'm going to call it the Zoom room. Get into the Zoom room. That's it. I just made it funny. Okay. All right, I'm going to let everybody crawl in. So I started posting the weekly, the hourly session snapshots, which I think is kind of useful to see how the progress goes in our live trading. Hopefully you guys like that. And I'll try to do like a I only started taking them like since Tuesday, but I'm going to do a screenshot after every session, and we'll post like the whole sequence at the end of the week in the results. Hey, Robert, Stephen, good morning, everybody. Good morning, good morning, good morning. Okay, so just kind of to orient ourselves, the biggest story of the day, of course, is crypto crashing. I mean, it's just big collapses. They're bouncing off the lows here, so we clearly have some opportunities if we can get the, it may be that the sell-off is already done, and we just don't have any chance to pick up the lows. But crypto is definitely the big story. Oil is at the highs. Oil actually is a trade here. And let me just look at gold as well. Gold is almost there. Oil though is actually kind of a trade here. So let's eyeball oil. We're looking, so that's sort of like the first possible trade for us as the session opens up. And then obviously, what do you call them? Equities are just mid-range. We got nothing much going on over here. I have some very, very cool stuff to show you on FX. I've thought a lot about it. I shared some of it yesterday in Asia, but I've thought about it even more today, and I have even more sort of a more refined look. I was hoping to have the latest version of the bounce indicator for you guys, but it looks like it's going to be over the weekend that we're going to finish up the code end. But what it's going to do, the addition is it's going to paint the triggered candle yellow. So like in this particular case, that would be the yellow candle that would give us a sell signal. Right now, obviously, it's not quite a sell signal because the close is not above it's not below the low, but it's going to just visualize that the actual trigger signal for us. In logic, it's going to make it a lot easier. So hopefully we can get that organized and get that going. Oh man, I was so busy doing research, I forgot to get myself a cup of coffee, which is a tragedy. So maybe what we're going to do is we're going to watch this candle in oil form, and if it holds these levels here, we're going to short it, and I'm going to run downstairs and get coffee, and you guys are going to just hang out for a sec, because I'm going to be a miserable bastard if I'm not getting coffee right now. Okay, so I think we can sell this pretty nicely here. The 66, the oil trade is a 21-20 risk reward structure. It may push through the 86s. That's fine. It's hard to say. I mean, oil got kind of crunched yesterday. I'm surprised it came back so hard this morning. But risk off flows, everything else, it can be very very inscrutable to try to find the pivot points here. But this is a good entry for us. It'd be better if we were above 86s, but beggars can't be choosers. We take what the market gives us. So we'll let that float. Hopefully by the time I come back for my coffee, it's not going to be stopped out, but I'll leave it on. There's nothing else that's an immediate, imminent trigger. So give me like 90 seconds and I'll be back, guys. All right, I'm back. I'm back, and we managed not to get stopped out. All right, how's everybody doing? Somebody let me know what you're doing, what's going on. Hi, okay, I see a little bit more people crawled into the room. So we short oil is our only trade, opening trade of the session. Gold is close, but no cigar, I think. Gold's getting close. Gold is close, nice push. So it could be a commodity open so far. Crypto is away. I think, what was crypto? I think it was 26, 27 was probably the lows, right? So crypto may be inching back up. ETH is my favorite crypto to trade, so we'll keep an eye on that. Obviously, big risk crash in the crypto markets, so we're going to try and take advantage of that. What am I thinking here? What time we have? Oh, it's early. Okay, 9:07. I think we actually have time for me to. So gold could be, oil could be a battle. So we're just we're gonna let it play. As I said, ideally, I'd love to have shorted oil above 86, but we took what we had as far as the opening trade. We'll let it play out. Okay, let's just watch. I just want to watch oil for a second before I get into my FX story, because if we get stopped out, then I have to recalibrate myself to level 2. I'm gonna post my spreadsheet. Those of you who hasn't been around with me, because sometimes Fridays tends to be like people who haven't really been around, because Asia is obviously, it's already weekend in Asia. So those of you who are in Asia are there. So I just posted my spreadsheet. Very important you take a look at it, because it has all the latest stops, targets, leverage advice, and all sorts of ideas. Look at that. Look, oil is just turning off the highs. Okay, so oil letting us breathe for a second. Let's go look, while we got time, into FX. Okay, so yesterday I put on a huge rant in Asia about how much I hate FX, how much I hate FX on every single time frame. And the reason I hate FX is because what I love to do, this is totally personal, so obviously you take my rant with a barrel of salt. I hate how long it takes for me to resolve trades on FX. It's not that I can't make money on the 1 hour chart. It's just that it's interminably long. Sometimes it's a 24 to 48 hour cycle to go through 5, 6, 7 resolutions on a 1 hour chart. And it's so fucking annoying. And and I have to watch the charts all the time. I like trading 1 or 2 hours, high intensity, high impact, boom, 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 1 minute charts. Plus the fact that so many times in FX, because of the spreads and because of just horrible execution I get, when we're trading with a 10 stop and 11 target, so tight that often I'll have to go 2 or 3 levels. Like, in other words, I'm completely correct in my direction. I'm at the bottom or I'm at the top, but it just spikes out at minus 11, and I have to go to another cycle. I have to go to another cycle. It all resolves eventually, but it was just so effing annoying that I was like, I hate FX. I don't know why I'm torturing myself with this thing, and why do I even try and trade this on a short term? But it's just not a short term asset unless you trade it like Kathy. I mean, Kathy loves it, and it's and she combines the funds and she gets the flows. And it's, if you want to trade FX on a short term basis, just trade with her, because I don't really have the patience for FX trades within the bounce discipline. However, if you just take a breath and go to the daily chart, there you only have to trade once a day for 5 minutes at basically 4:30 in the afternoon, 4:45 New York, or if you're in Asia, maybe 6 in the morning when you wake up, the start of the global day, because you're basically going to use the daily chart to initiate the bounce protocol. And where it gets even more interesting, and where I think the real value add of the bounce protocol lies, is is how do you pick direction for the bounce protocol? So on the 1 minute chart, it's easy. We look at the highs, lows. It's just it's very if we're near the lows, we're looking to buy. We're near the highs, we're looking to sell, right? But how do you pick kind of relative value? Gold is at highs. Okay, thanks, Juan. All right, I guess I'm gonna have to go. Oh, we're almost there at the thing. You know what? I'm gonna take freaking oil. Fuck oil. Okay, I'm gonna take oil at plus 15 because I wanna free up my attention span and my capital for indices when they start trading. So we took the 15 in oil. It actually probably takes the full 21. Okay, gold is a sell. So shift gold. We're selling gold. This is level 1. Gold is a 110. $1.10. Oh, no, it's wrong. Fuck. Sorry, it's the wrong thing. I can't talk and do it at the same time. Control G. Okay. $1.10. So dollar stop, $1.10 target. We're looking to take 40.77. So let's watch gold. I'll ramble on about everything else later. All right, who you guys bank on oil? I hope you guys all bank because I actually took it out early, but it went full 21 cents. Who took the oil trade? Anybody? Nobody? Juan? Alan? Alan, what are you trading? Are you trading the MCLs? You trading the MCL, Alan? Good job, Miguel. Good job. You are, huh? So how is just curious? Can you just for anybody who's the U.S. and just for us who are more futures oriented, can you tell me your MCL entry, your MCL exit, and the basic is it a 4-penny spread just like it is in the CFDs, or is it a little better on the futures? Because I traded MCL very, very infrequently. I just I decided all I'm going to trade on my own account is just equity indices. But it's absolutely gold and oil are absolutely tradable for the U.S. customers on the future side. I just wanted to know, your personal experience of how it works. All right, gold is popping up, so we may have to go to level 2 here. Let's watch that carefully. Who's new in the room? Say hi to me. Ask me if any questions you have about the strategy, what we're doing. The best way to learn a strategy is to follow me. The simplest way I can describe it is we sell tops, buy bottoms. There's a certain structure to how we do it. We also don't quit after the first trade. If we get stopped out, we wait for the next top, we wait for the next stop, for the next stop. We go all the way up to 8 attempts to pick a top or pick a bottom. And that's what makes our trading so unique and profitable, because we just don't quit on trades. That's the single most distinctive twist about how we trade versus everybody else. So who's new? Come on, there's got to be some new people here. We have a whole bunch of new people join up. It's Friday. Usually everybody comes in. Don't be shy. Talk to me. Who's Flo? Who's Flo too? I'm going to start just embarrassing you like I always do. Oh, Marco's here. Hey, Marco, nice to see you. There's some people who are old but are new because they haven't been with us. What Chari, butchering your name. Sorry about that. Hi. And Bob. Who's this? Is this Bob Lacoste? Who's the Bob? Hey, Marco. So yeah, Marco, any questions, let me know. But I think you basically get the gist of the story of what we do, how we trade. Most important thing is sizing and structure in what we do here. Oil is just kind of flirting. It was stopping me out here, so it's fine. We're gonna let it go. Oh, let me put our focus into indices. No, indices are still mid range, and where is an end? Crypto after crashing in Asia, kind of very quiet now. So nothing much going on over here. All right, I have to monitor the gold position. before I can go back to FX. But I really, really want to talk about FX because I do have like an incredibly, what I think is a really intelligent way to implement the bounce protocol in FX. And I'm actually going to do it myself because this really solves my whole issue of like, I got to watch this. Like, I like watching the screen intensely for 2 hours and be done. I don't want to watch it 24 hours because, you know, the dealers are going to fuck me for a pip, which is, you know, inevitable in FX. All right. Oh, gold is just, you know, teasing us. Okay, fine. You know what? We get stopped out in gold. I'll see it. We'll return to it. We got about 15 minutes before the open, so I kind of want to run you through my basic ideas. So it's very, very simple if you sort of think of, you know, what I have in mind. Basically, look at a daily chart. Go back. I don't know. You know, it's all just estimates, but go back like 6 months, right? So you look at this. You look at the high 6 months. You look at the low 6 months, right? Then split that range into two. So I'm just going to do this with you guys visually. So here's the high. It's an approximate high. It's not, you know, don't let the perfect be the enemy of the good. It's not about the exact highs. It's about how you want to position yourself. So so we have high, low, midpoint of the range, right? You guys with me? That's sort of like, you know, where we are, right? So the general rule of thumb for the daily longer term FX idea is if you're below the midpoint, you're looking for buys, right? It's very much in spirit of our against trend methodology. If we're below, we're looking for buys. If we're above, we're looking for sells, right? Now, obviously, you know, when we just kind of break below and you get a massive sell-off, we're gonna get caught occasionally. Who gives a shit? So you know, we're going to resolve some trades. Some trades are going to take 2 or 3 levels to resolve. But the point is, we always want to be on the opposite side because that is the essence of our structure. We like to be counterflow because that's where we have the greatest possibility of a bounce. I mean, the name of the strategy is bounce. So we stay with what has worked for us on a 1-minute chart immensely well. Same thing on a daily chart. So running through this thing, we're looking now, obviously the only trades we want to take in the euro are the buys, right? The buy signals. And then we just simply transpose the same entry structure that we've transposed, you know, on the 1-minute chart into the daily chart. So here we are, you know, like we're looking for buy signals. So you know, where's my first? Okay, let's say we're below midpoint. Here's the buy signal, 16.15, right? Now, on the daily charts, if we're trading with a 10-11 on the 1-minute chart, we're going to trade with 111 or 110 and 100 stop. We're going to expand all of our stops and targets, so couldn't care less about spreads, movement, volatility, and even like, you know, checking the trade more than once a day as to where we're looking. So I'm coming in 16.15. My stop is going to be 15.15, which by the way I think gets stopped out right over here. Maybe it doesn't. I'm not sure. No, it doesn't get stopped out here. So I come in 15.15, and I'm looking to do 17.15, right? And it doesn't, you know, nothing works. So I basically get stopped out eventually over here. So that's level 1, right? Level 1. Then, and this is a little problematic. I'm not sure if you would, you know, if I would take this trade, but let's assume, you know, I take this trade. So in other words, then I have no trades once I'll get stopped out somewhere over here. So it takes like a good couple of weeks, right? So who cares? I'm not really managing it. I get, you know, I come in here 1370 and I get stopped out 1270, right? Let's just say I took it. Now I'm coming in level 3 and I'm coming in at 1305. Stop is 1205, which never touches me, right? Never touches me. And my target is going to be 14.15, and boom, I hit target. Now this takes like a good month to go, but who cares? I have 25 pairs. I'm managing them on very low, initial values. Sort of same kind of idea. Let's say I start with a $30,000 account. I do 3,000 units. So that's $30 for potential trade. So I lose 30, I lose 60, I make 180 on the third try. Boom, I'm in the money and I've done. And you just kind of, run that cycle through the 25 things. It's very, very relaxing and manageable to be able to do it this way versus trying to just, run it on any other time frame, because any other time frame is just so time consuming. Now that's just my own personal opinion. I leave it to you guys, to how you trade it, but I am perfectly happy trading it, in that fashion, because it's in sync with everything we do. It's counter trend, it's timing the entry, it's proper, size management, and it's proper leverage management. And it all fits in, with our structure. So, we can look at it. You guys type an instrument, and we'll look at it. Give me I want to see at least 3 instruments from you guys, and we can run through the charts, and I'll show you exactly what I mean as far as the trades go, so that you guys totally internalize this. And then I'll start in Asia. I'll just start calling out, and then I'll review it in New York the next morning. What trades set up according to these rules. Like right now, today, if you're a holds bid here, it's going to set up as a buy. It's going to set up as a buy. All right, so we got nothing else going on here. We got 8 minutes to the open, so might as well let's take a look at the pair. So you want to look at yen, right? So here's yen. So where's yen? So first of all, yen is, you could pretty much say I don't even have to split it to you visually. It's obviously in the upper end of its range. So we're looking for sells, right? We're looking for sells. So clearly, here's the sell signal, right? This was 1465. Target would have been 1365 or 1355. Hit the target. Boom. So once we hit the target, we're looking again for a sell turn signal, because it's still above the highs, which would be around here, 1431, and we're looking for pretty much 1321, right? We're not quite there. We're looking for 1321 for us to hit the target. So that's pretty much the story of the yen, of where we're at on the yen. Last 6 months, basically exactly. You're just, you're eyeballing the highs, the lows of that range, looking at the midpoint and saying, okay, if I'm above midpoint, I'm going to be a seller. If I'm below midpoint, I'm going to be a buyer. Okay. Bernard, so give me more pairs. Come on, let's go. We got nothing else going on here, guys. I'm only going to teach this once. What is it? Stephen, what is that? $2. Is it dollar Swiss? Is that what you're trying to do? Dollar CAD. Okay, dollar CAD. One, let's give me dollar CAD. Okay, dollar CAD. So dollar CAD, actually, so we probably have to get a little bit more precise here. Let me see. This is the high. This is kind of the low, I guess. Right? So it's a sort of a 30, 21. So 25 is the midpoint. This is pretty much a midpoint here, right? So we're kind of at midpoint. So now we sort of want to start looking at the buy signals. Like it's good enough. It's sort of below the midpoint. So I'd probably be a buy. So here we are. Let's say this closes. This is actually closing above the open. Say 25.21. I would get long Canada here, 25.21. Target would be 26.31. 24.21 would be a stop. And Canada being Canada, I'm sure it's going to stop us out and dribble over here before it finally bounces. But whatever, that's part of our strategy. It doesn't fucking matter what I think about the trade. I don't care about the fundamentals. I don't really have a view on catalysts on this whole thing. I'm trading mean reversion on relatively mechanically on all this FX stuff, right? Dollar Swiss, dollar Swiss. So Swissy is interesting. Swissy is really, I think, at midpoint here. That is another interesting thing here. So this is pretty much midpoint, right? You kind of look at the chart where 89 was the bottom, 93 is the top, we're 91. It's kind of a midpoint, right? So there were all these good sells. And by the way, so the other thing I need to really, really clarify. So when I'm talking about 100 pairs, that is, pairs where there's $1 in front of it, or 113 in the yens, you're perfectly okay to use, and certainly when you're using common dollar crosses where it's $1.50, $1.60, that's where 110, 100 is a perfectly respectable trade. Even Euro Swiss 110, 100 be a very slow trade, but that's a respectable risk reward. But when you get into these tiny little spreads, especially Euro pound and stuff like that, what I would do is my sort of shortcut to how I would trade stops and targets is just average up to the next whole number. So Aussie Swiss, I'd average up to 70. So my stop would be 70, 77. Aussie yen, or average down. Let's say, if I'm 4 below average now. So my stop would be 80 to 8, to 88. With where are we here? Euro pound 85 to like 90. Okay, that's kind of how I would do it. So with the Swissy, it's like I would use a 90 to maybe like 99, right? 99. 90 to 99. So 99 target, 90 stop, right? Just because it's not quite 100, it's a super slow trade. I think that's just a good rule of thumb to use in this stuff. Yeah, Bernard, be my guest trading 5-minute charts on FX. Be my guest. I have zero patience. The reason we kind of have our power hours is because the instruments that trade through power hours are the Nasdaqs, the Dows, the cryptos, oil and gold. The big macro instruments that everybody in the world trades, where there's lots of two-way price action, highly liquid, and they move around. I've been in a situation where I'm not kidding you. It's taken 14 hours to move 10 pips in the euro dollar, right? If that isn't enough to blow your brains out, I don't know what is. It's really, really dependent on your personality. So I just decided, listen, if I'm going to trade FX, I am going to just set it and forget it. I'm going to go to sleep. I'm going to put this trade on. It could be three-week trade, 4-week trade. I could care less. It does, it resolves great. It doesn't resolve. Then I look for the next setup and I keep going. So I'll spend 15 minutes, end of day, every day, seeing if there are setups there, put the trades on and just run the portfolio. Otherwise, the mental energy that I have, the mental focus that I have, I want to spend on the 1-minute charts, and I want the instruments that, the criteria, Tammy, are exact same criteria as on the 1-minute chart. We're looking for a turn candle. So like the first point is, how are we oriented? Are we oriented long or are we oriented short? So like I think in euro, we're oriented long, right? So now we're looking for a buy turn candle. A buy turn candle is a green candle that beats the open of the red, right? So you have a red, green. Or if the green doesn't beat the red, then you're looking for the next green that has the higher high, right? You with me? I mean, it's the exact same thing as we do on the 1-minute charts. But we just transpose that to the daily charts. All right, what time is it? It's 9:29. Let's get crazy with the equities. Okay, let's see what equities. I'm gonna just actually get off I want to watch both equities here. Gold will do its thing. So we're kind of mid-range. 1480 on the NAS. It's impressive that I'm actually impressed that equities are holding bids so far. But let's see how we open up. Let's see what we're going to do. Sometimes the first 5 minutes don't even have any price action. All right, popping a little bit to the top. Not much price action. Top here is basically 34,700, so it's quite a way. But let's see if they can. Yeah, maybe they'll make 100 points in it. See, like you're looking at indices. In indices, you can make 100 points in 2 minutes. In FX, you can make 100 points in 2 centuries. So that's why I just decided let's just stick to the daily charts. What's interesting, by the way, is when you do look at daily charts, we'll go through them again. The one thing that's kind of super interesting as I was looking through this thing is that you see a very uniform euro strength all across the board. Euro is really surprisingly big, and euro pound, which has been like just a grossly oversold pair, is definitely signaling a buy on the close of business day today. So I'm definitely going to go long euro pound today, assuming it holds those levels. Okay, so we open up just twiddling our thumbs. Not much going on over here. Did you guys know that Meatloaf died? For those of you old enough to remember who Meatloaf is. Very sad. Paradise by the Dashboard Light, one of the greatest songs ever written. Yeah, 74. There's no doubt that, I think his obesity was a factor. It's funny, for those of you who are like Aussies, I actually was in Australia one year, and what do you guys have? Is it Australian football? I think it was Australian football. You have like a Super Bowl of Australian football or something like that. And Meatloaf was like the guy who sang like the national anthem and just kicked off the game. It was kind of wild. All right, Naz is pushing. So 800, we clear 800. That's our sweet spot. We like clearing the Australian rules football. Yeah. So he was like the celebrity singer. It was kind of wild. Who's chatting me in Zoom? Are you guys saying hi to me? Hey, Josh. Josh, be sure to chat. Yeah, I see you chatting me in what's Origin League? Okay, Naz, popping. Oil all over the place. A rugby league. Yeah, that's what I think. It was rugby. It was rugby because like you guys are obsessed with rugby. Yes, that's what it was. Because I was like, oh, this is like American football, and then I was like, yeah, rugby. That's what it was. Yes, because that's like a huge thing, right? Is that a huge thing in Australia? The rugby Super Bowl of the like where they have like. But like, don't you have like like we have end of the year Super Bowl championship league game for the stuff? Okay, gold stopped me out, huh? Look at that. Did it or did it not stop me? I'm confused. Let's see. What the hell did gold do? No, gold. We made gold. Hey, look at that. We made gold. I was surprised. Okay, so gold resolves. Really, gold resolves? Let me just, sorry, this is, okay, I'm watching Naz here. Naz is the next thing. Did gold resolve? Yeah, I guess gold resolved. Jesus, that was kind of crazy. Okay, gold resolved. So we're in good shape. Who's in gold? I'm like, it's showing me that it's resolved. It definitely resolved. Yeah, it did. Okay, yeah, okay, cool. Okay, all right. Now we come to the fun part. We're in Naz. Looking to the highs. Where's the YM? Okay, here's the Dow. Let's get interesting. Okay, so we're through the 800s, through the highs. Let's look for possibilities. So here's so Tammy, sort of like to kind of guide you through. We hit the highs. We're obviously short biased, right? And imagine this is a daily chart. So we're short bias. What we're looking for is a close below the open. So this red has to beat the open. If it does, we got to trade. If it doesn't, we wait for the next lower signal. So like right now, this obviously is beating the open. So it's below the 800. Got 26 seconds left. We're waiting patiently because we don't want to get dipped out into the trade. One of the drawbacks of this, unfortunately, is that sometimes the corrective move pretty much gets done in this candle, and then we're gonna eat the retrace. But that's part of the plan. All right, let's watch this 6-7 seconds. I'm gonna let it complete before we get into it. All right, I'm short NAS, and our as always, it's an 11-10. And I'm going to get retraced. Okay, fine. That's not a surprise that we're going to get retraced on a massive reversal candle. So now we're going to wait for the next opportunity to short. We may, I forgot who it was. I think it was Peter who suggested that we could trade two of the same as long as we don't have more than 3 positions on at once. So, well, too bad. I've already missed the thing. Okay, so fine. So we're not gonna, no trades in the Dow, because I should have taken this Dow trade over here, but it's fine. Okay, NAS coming back. If this closes lower low, it's got to close a lower low. If it doesn't, I don't have a trade, but if it doesn't, I'm coming back for level 2. Very tough. Not really. I'm passing up on this. I'm going to wait for a better candle here. For a candle, it's just a little too problematic. I want to pass up on this. Let's get a better entry structure here. Now, if this closes a lower low, I will go short, because that's a pretty strong indication of failure. But if it doesn't, what do we got? 23 seconds? That's pretty good. Okay, 16 seconds. Let's watch this carefully. Let's see how this holds. Okay, let's get short. It was good enough. It kind of it did create the trade for us. And we're looking for 68 as our take profit. Very close, came very close to it, but let's give it a shot. Oh, 68, got done. Okay, so took us 2 levels. I was a little patient. I wasn't, jumpy, and that helped us resolve in 2. I could have resolved the YM as well, but I was just a little bit late to the trigger. So gold done, NAS done. Oh, look at that. Everything is popping back up, but like now it's all going to be mid-range. So we no trades really in Bitcoin, everything else, alas, we don't have any trades. Okay, so let's see what's going on over here. Maybe get a second cycle to the upside. Maybe get a second cycle in the YM. Maybe gold is looks like gold is looking to test the highs. All right, Juan, keep an eye on gold. If it hits 43, that puts us back in play. Oil is just nothing. So oil's got no trades. We took the 1 trade in oil and we got done. Okay, so let's actually keep gold and NAS as our 2 trades, and then we'll see what goes on there. NAS really collapsing off the reversal, and this is like it's not that we couldn't have gotten this done if we were sooner. We could have done this in 3 levels, right? Maybe even 4 levels if we got stopped out twice. The point is that by being selective, we just save ourselves our risk budget. We're not spending our risk budget flagrantly, upfront, promiscuously. And that helped by getting here and then waiting out this candle and coming in on this candle. It just made it much faster, much easier, right? You all did the NQs, right? Everybody resolved in the NQs, I imagine, because now it's just a straight down move now. So for gold, the ideal trade for us would be if it runs through the 43s, takes out the round number, and then we start seeing a little bit of profit taking, because that's a perfect setup for us on that structure. By the way, so this is a lot more dangerous. I'll be the first one to admit it, but I've been doing it, having a good time with it. this whole idea of like, let's subdivide the range, especially, and this is, it's only valuable once New York opens up, because the range before New York is really bullshit. But if you trade like from the New York Open and you say, you know what, I'm going to trade the same idea. If I'm in the upper end, I'm going to sell shorts. If I'm in the lower end, I'm going to try and buy longs. With our structure, like with our structure, looking for the turn candles, looking for the flip side, it's actually a pretty cool structure. Now, sometimes you're going to get just one-way moves, but the point is that's the beauty of our structure. When we get the one-way moves, we're not like if we have level one here and it just simply dumps all the way to the lows. We're not entering. We're just watching it, and then when it eventually bounces, sometimes so it'll be a level 3 resolution instead of a level 1 resolution. But a lot of times, what you find, especially midday, you're going to get all these bounces underneath the half point, and all these reversals above the half point, and they're very tradable. Again, I caution you not to do this. It looks like gold. We just missed the gold. Gold just collapsed completely right in front of the highs, so we couldn't get the trigger. Okay, that's fine. Again, the most important takeaway, I think there's two most important takeaways. One is just focus on a couple of instruments at a time. That's literally the most important takeaway. And the second is don't worry about missing trades. Worry about entering the best, making the best entry possible, because there's always opportunities, for trades, but the entry is the difference. The execution is the difference between an easy trade and a difficult trade, and sometimes even a stop out if you have poor execution and poor cycle. So that's what I'm working on continuously here. How's the YM doing? All right, so there's no interest in gold until it comes back up through the 43s. YM comes off the highs too, so we're sort of mid-range everywhere, right? So what I want to show, we'll come back to the 1 minute charts. I just kind of want to show you what's interesting to me is if we look at the euro, right? Just look at the euro crosses where first of all, we're looking at the euro dailies. Here's what the euro dailies kind of show me. So we need to hold. I guess what's the open on this? Let me just see. 42. So we got to hold 40. Basically, if we end 45 or better, this is a buy signal in the euro on a daily, right? That's number one. So you kind of see, euro, buy on off-wire trade. But what's interesting is if you cycle through the crosses, it's looking strong all across the board. I mean, look at this. It's definitely a buy signal on the euro Aussie, because let's say euro Aussie ranges 53 to 63, right? So midpoint is about 58. We're like just a little bit below the midpoint. So therefore we still long biased, and therefore we certainly have a buy on the Aussie side. Euro CAD for sure. Euro pound is probably one. Look at Euro pound. Euro pound. I was watching it this morning, kind of pissed off. I was like, oh, I really want to buy this, and I'm trying not to do it because I want to end of day close. But it was over here. It was really, really strong. So Euro pound is signaling a very, very powerful breakout. Now, could this fail? Absolutely. But the point is, if this fails, the probability of the next buy signal is going to be even better because we are so deep down that the mean reversion trade really kicks in. So the second trade was one. It was, but I really didn't like the way, I made a essentially a interpretive error. So, according to our rules, so where are we at? So this was a trade, right? But I held off on it. Because of the way it kind of came back up at the last second and started going up. And I was like, you know what? I'll be patient and I'll wait. So if you took it mechanically, you would have had level 1, level 2, level 3. I held off on this one, and therefore I only took level 2, right? I kind of, I cheated. I sort of made a. My view was, if I'm wrong, I'll get another. I'll get the next red candle. If I'm right, I save myself a stop. That's basically, was my thinking at that point. Does that make sense? So, let's see what we're doing on the Dow. Dow, maybe we might be getting, yet another run to the highs. And so, this is, again, it's a very artificial example. So not like I really want you guys to take this as a commandment, but 820, it's basically 700. 700 is the midpoint, right? So this actually was not a trigger. I was wrong. I thought, so we're underneath the midpoint. The open on this was 94.75. The close on this was 94.50. So this missed. So this wouldn't have given you this was I was going to say, oh, this would have been a nice buy trigger if you're trading kind of, if you want to scalp away from the highs, and, through the midpoints. So in fact, this would be, if you're kind of mechanically following, this would be a buy trigger, and you still would have made money. This is the beautiful part about this. You could have scalped this to the upside, and it would have been fine. As a buy trigger. So for those of you who want to get a little more active and take a little bit more risk at the mid level, then you could do it. This kind of a structure, but I'm going to leave I'm basically going to leave that way of trading to the dailies, because this could drive you, unless you're really watching and very, very focused on your entries. Like if you say to yourself, I'm going to spend 2 hours and I'm just going to trade, New York from 9 to like 11:30, and I'm going to trade the midpoint as well as the highs and the lows, I think you'll be fine. You'll be able to put on a few more trades and definitely resolve it. But I would only do this in the equity piece. Maybe I would do this in crypto. Those are the only ones where you have enough volatility to kind of make it work on a 1-minute chart. Okay, who's in the room here? Jeffrey, how you doing, my friend? Are you trading FX still? So Juan, is that clear? I mean, I basically cheated. You're absolutely right to say, how come? Yeah, well, so I have, honestly, Raymond, I haven't looked at the crypto daily. The crypto daily, you got to understand that even if I said the word yes, the stops and targets are complete. Like the volatility in crypto is 10%. So like I would literally, like for Bitcoin, let's just put it this way. So for Bitcoin, I would put if I'm on a daily, I put like a 3,000 stop and a 3,300 target. Minimum, fucking minimum. On Ethereum, it'd be like 300 stop, 330 target. That's what I'd be doing. Okay. Otherwise, it's just untradeable. So you got to be willing to, of course, you can size it properly and do all that stuff, which is fine. But like, otherwise, it's just a waste of your time. Like you need a 10% volatility wrapper on these things to make it viable. But yeah, you're trading CFDs. It's you can trade it such small size. It's not a big deal. Totally doable. All right, looking at Dow. Dow looking like it wants to go, baby. And by the way, if you want to, again, NASDAQ to me is the favorite child of like, scalping continuously. So here's a good example of scalping above the midpoint. Red candle, right? You short here 23s, it obviously totally resolves for a 10. Like, the beautiful thing about NASDAQ is that it's often a 1 minute trade. So, when you wait properly and you set yourself up, the thing gets done in 1 to 2 minutes. It's really, really nice. Yeah, that's right. No, that's correct. That's correct. We once the first, so once we fail on the first green, let me find a failure. I just want to let me find a excuse me. Let's imagine this is the high, right? You with me on this? Let's look at this. Let me see if I can annotate this for you guys so you guys can actually see this properly. So here's the arrow. So in this case, this is not a sell, right? Let's imagine this is a high and you get the red candle, right? And you're like, oh, it's not a sell, right? So therefore, there's no trigger to the sell side. What's the rule after that? The rule after that is you need the next candle that beats the not the low of this. I mean, you could say the low, but I actually use the open. That beats the open. So the close here is lower than the open here. So then you just go to the next one. You say, yeah, now I'm going to get short here. So that's the sequence. You skip anything else that isn't in sync with that particular rule. The next, all you're looking then is just to beat the open of the failed signal candle, right? That's the rule. Is that clear? Most of the time, it's actually the next candle, right? So in this case, yeah, so so we got stopped out here. We got stopped out here, and we were looking now just for it to beat the low. This actually beats the low right over here, right? And I just held off on getting on taking it out and waited until this one to enter. So I just cheated. But yeah, all we're looking for momentum. And it obviously has to be, look, it definitely has to be a red candle if we're short, and definitely has to be a green candle. It doesn't matter if the green candle beats the low. We're not interested in a green candle. What we're looking for is on the most immediate time frame for the market to sync up with our point of view, right? So it's got to be red and it's got to be lower, or it's got to be green and it's got to be higher. Because our point of view is we're going higher, or our point of view is going lower. There's no point in fighting the market. We're just timing the market to its most, to its fastest level on the 1 minute chart. Does that make sense, Juan? You understand what I'm saying? I just want to make sure there's no confusion. All right, now we're coming back to the lows. We couldn't get the highs. Let's see if we're going to start hitting the lows on all this stuff. Oh, I think oil is oil crashing? Where's oil? Nah, Jesus. Oil is, I forgot. Oil hit 83 yesterday. That's right. So we got a long way to go in oil. Crypto is still doing nothing. So we got, it's really only, it's just an equity story so far this morning. That's what we're doing. So 14,600, that's a nice round number. That's the low of NAS. Obviously, we start targeting that. That's going to be an interesting play for us. I'm not going to do these trades, but if you want to, I'm going to comment on them out just to give you an idea of like once. And I generally would not even start looking at these midpoint trades in NASDAQ until 10:30, 11 o'clock in the morning, New York time, because the first hour it's a very volatile time. You don't want to fuck around with it. But let's imagine this: we're below midpoint here, right? This candle closes here. Would you take the long trade? Yes. If you're scalping, you certainly could, because this is the below the midpoint. Our bias is long, and if this candle holds, obviously it's a big if. If we hold at these levels, that's a signal to us that the buyers are in control on a micro level and worth for us to shut. So it's as every second ticks away, they're losing control. So certainly not a powerful candle for us. And if this turns negative, then we've got no trade. The beautiful thing is, if it doesn't set up, we're not entering into a false positive, right? We're just we're not entering into a false positive at this point, right? So now it just completely dies out. So clearly, sellers got plenty of room here. They want to gun this all the way down to the OO. Yeah, the bounce. Do you not have the bounce? you see these, it puts these lines on there. The bounce, everybody should have the bounce. Let me just do this. Here it is. You just click on that link and it will automatically install itself into your favorites folder. The bounce is actually a private indicator. It doesn't even exist on TradingView. It's only private to BK. Like nobody in TradingView even knows about it. But what it does is it paints the lines. What I'm waiting for, hopefully I'll have it for you over this weekend, is that the next iteration of bounce is actually going to give you the trigger candle. So like when the green beats the red, it's going to turn yellow or orange or whatever. I'm going to choose yellow as my default color. So you're going to know, oh, that's the turn setup because the close is higher than the open. That is a legitimate turn candle. We can get long, we can get short, however you want to do it. So it's really gonna paint it out, and it's gonna we're gonna have like we're gonna have a buy view and a sell view. So if you're underneath the midpoint, you can turn on the buy view, and if you're above the midpoint, you can turn on the sell view. Yeah. So one, that's rare that the CFD and the futures are very much like they're within a point of alignment. So because the CFDs are derived from futures. So yeah, of course, occasionally you're going to get, as I said, don't let the perfect be the enemy of the good. It's all about general estimates, right? I mean, you're not trying to trade at the perfect midpoint. You're trying to trade underneath the midpoint or above the midpoint with a reasonable structure. Like this is clearly underneath the midpoint. So if this was higher, you certainly would have taken it. Okay, so here's an example. Let's play this game if the game lets us to be played. So we are underneath the midpoint. We have a long bias, right? Because our bias is always the opposite of whatever the market is doing. And we're not getting. I'm trying to find a setup, and of course the market is not giving it to us, which is fine, which is perfect. Like it means the market is in a pure sell mode, and we would be dumbasses to want to try to buy it. We have no price signal telling us that it's worth a buy. That's the beauty of our strategy, is that it keeps us from most of the time doing the stupid thing. Now, here's what's interesting. So it's kind of like now, there's a little binary switch. No, it's still not really a trade. It's still really not trade. Buyers are trying. The only thing we can say that's mildly positive is they stop selling it. So, okay, so now this becomes a much stronger buy candle. So we've got 51 seconds. Let's see if they can actually hold these levels, because it's all these short covering moves. But as soon as they bring it up, the sellers come in and start selling it. So like it's the point of where the sellers get exhausted at selling it at higher levels, that the buyers then retake control of the price. Right now, it's still a seller's game. Like you can see 30 seconds in, they're not letting the buyers, they're just squeezing the life out of the buyers. Every time the buyers come up for air, they push them down on the ground. Okay, 20 seconds left. Let's see what we got. And again, I'm not making this trade. I just wanted to kind of alert you to how that, the whole trade structure would work. So we got 3-4 seconds to 1. Okay, long here. We're long 52s, right, on the close. So we're long 52s. Target would be 63s with a 42 stop. So let's see if that works. So we're long 52s. Boom, we're done. We're done, right? Just like boom, 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 we're done. That's the intra range scalp that you could play around with if you if you wanted to do it. All right, so now, how many of you actually took this trade? How many of you inveterate trading junkies took this trade? I have a feeling Juan took this trade. I bet Tammy took this trade. Almost. Jonathan took the trade. But Jonathan's been trading for a while, so he's he gets you got to get an honorary badge. I think I'm gonna make it like a proprietary emoji and with like a little trophy. There's Miguel, of course, and you're all gonna get like, and it's gonna be like the more of a degenerate you are, the more badges you collect. So I'm going to make the degenerate. I'm going to make we can make proprietary emojis in Slack. So I'm going to assign those to all of you guys. Steven, I'm glad you missed it. It wasn't meant to be a trade. It was only like, for all the hardcore traders in the room here. But yeah, I mean, you get the idea, right? It's kind of that's the play. That's sort of like, if you want to trade the intra play. And it's it's fast, it's volatile, and it certainly it doesn't work all the time. And let's say if you got stopped out, now you're basically in a bounce cycle. Now you sort of a bounce cycle early, so you have to be fully mentally and financially prepared for, okay, shit, now I got to resolve this. It's not even at the lows, but boom. So now it's at the lows. By the way, now we're actually getting a reasonable setup. So like at this level, we don't, there's no way this candle is unless this candle goes to 60, we're not buying it. But now we're in a decent place to begin initiating the bounce protocol, right? Because they flushed the lows. And I mean, that was Jesus, was that a flush? Holy cow. The midpoint makes a lot of sense, right? I mean, it makes a lot of sense. I mean, that's something that I was kind of screwing around with myself. And that's the beauty of trading one single setup over and over and over again, you start to see new and interesting things. It's like appreciating art, you look at a painting long enough, you see lots of interesting nuances. Okay, so now this gets interesting. So now that's not a buy point, but if the next one holds here, that's actually a buy point for us, because we're just looking for a higher high now at this point. So now we got a buy candle, and we're looking for a high high. It's probably not going to happen. We'll see. It's hard to say if the sellers are done puking. It feels to me like they really want to run the 600. Even if this gives us a signal, it's very likely that it's going to be a false signal, but we'll take it because it's going to be a legitimate signal. But in a more, I mean, they may hold ahead of the 600. That's rare that they can hold the bid in front of the round number. Generally, they love to run through those because that's where the stops are, and they can gather all the stops really, really swiftly. So like right now, we got no trade, right? No trade at all. Although now, this is a very, very tough candle. I'm watching it very carefully. Really no trade. I'm not taking it. Too little, too weak. And if it works, it works. I'll let it go. I wanted to see a little bit more. I mean, that's interesting. Wow. No, it would have worked. Really would have worked. God damn it. All right, it's fine. It was just sort of very even keel. We'll wait because I think they're going to run the 600. I'll be shocked if what time is it? What time is it now? It's 10 o'clock. Wow, we already went through the hour, guys. Wow, damn, that time went by fast. All right, we'll stay for 5 more minutes. If they run the 600s, we'll play it. It's fine. Yeah, Richard, we're not trading FX. I told you I could give a fuck about FX at this point. It's dailies on the FX for me. I'll review the dailies with you guys before we go. Yeah, it looks like look at this. That was a very unusual, and I should have taken the bait on this. They held the 600. Now it's a really now it's a runaway trade. So unfortunately, we couldn't get this trade off. And I think guys, my apologies for it. Not as much volatility today, but we take what we can get. So we're at 600. We started the week below 14,000. I think that's pretty good. I think I'm going to wrap it up today for trading. I gave you lots of interesting things. I think if this goes through the 600 post-hour session, for sure there's going to be opportunities there, right? The stops and losses I told you the stops and losses. They're 100, 110. You got to trade smaller. You're trading on the dailies. That's the beauty of it. You could give a flying F about 10 pip stops and targets. It's like Rebecca, FX is like like the crazy girlfriend. You break up and then you kind of come back to it because you can't. You like the insanity. So I don't think I'll ever break up with it, but I think I'll just trade it on a more reasonable basis. No, Craig, I don't record the Asia just because it's just too much, too much stuff. I repeat all the ideas in New York, so there's nothing I tell you in Asia that isn't repeated. In fact, what I do is I improve. Like Asia is kind of like my look at this bitch, totally going away from us. Okay, fine. So unfortunately, my apologies. We should have had this last Nasdaq trade, but I wimped out. So yeah, everything I say in Asia, I repeat back in New York in a more intelligent fashion because I've had like 24 hours, 14 hours to think about it. So it's just it takes a long time to post it and do it, and it's just not worth it. Like it's been like a massive amount of work for me just to work Asia as is. So that's how we do it. Okay. The daily FX ID is here by the Craig. The daily FX ID is disclosed in today. So if you watch today's, you'll see it. I go through it. Okay, I go through it. So nothing I tell you in Asia is not repeated in New York. In fact, it's done better in New York than it was in Asia yesterday. So actually, let's do this. Okay, we're done for the week. Nice little. We'll do this. We'll make our print. So if you think about it, I think I started. What did I start? Here's my print for the week. I think I started like at I started at 13, but I didn't clip that balance. So this is a pretty good balance. We're up like $600 for the week. Nice trading. So let's go to FX. Let me just sort of show you, where our like absolutely clean, no doubt setups are. Euro pound for sure, because that's a turn trade off the bottom. Euro dollar, if euro dollar needs to hold, they're right here, 47. It needs to hold 42s. So anywhere like euro dollar 45 or above on the close, that's a buy, right? Yen, Swissy, I think let's just go through pound. There's no trades here. No trades in the pound, no trades in the yen, no trades in the Swissy. No, this is I guess it's midpoint. This is a legitimate trade. You're at midpoint on the Swissy. This is a sell signal. So buy on the euro, sell on the Swissy. It's effectively the same trade. Caddy is the buy. Caddy's underneath the midpoint. Holding here, if it holds here at 37, certainly beats the red candle. It's a buy. And then you can go through all of the crosses. So basically, Swiss caddy, euro pound, euro Kiwi is already done. Euro Aussie is a potential trade. Euro, wait, let me see, make sure Euro Aussies is it underneath the midpoint? So it's a 64 to 10,000. Yeah. Euro Aussie is close enough underneath the point. Euro CAD for sure underneath the midpoint. Euro CAD is a trade. Euro Swiss, not a trade. Euro Yen, not a trade. Pound. Is it? No, that's below midpoint, so I wouldn't trade this. Pound Yen, not a trade. Pound Aussie, not a trade. Pound CAD. No, not a trade. I don't know what the hell that is. Pound Kiwi. No, Pound Kiwi actually is super interesting. Pound Kiwi, we get a red candle somewhere next week, that breaks the lows. That's going to be a trade, to the short side. So no trades in the pound. Aussie, not a trade here. Aussie Swiss, not a trade because we're underneath the midpoint. We're looking for buys here. We're looking for buys. So we're looking for buys on the Aussie side because Aussie is clearly oversold. So we're looking for buys. No trades here. CAD, no trades here. It's kind of midpoint. I guess you could say CAD Swiss would be a trade. But there's no Kiwi Swiss. All the Kiwi stuff is all the way down. So Kiwi is going to be all, buy all the Kiwi crosses are going to be buy orientation. Now, I'll be the first one to admit that you are definitely going to get, like if you go Kiwi Swiss, Kiwi Yen, Kiwi CAD to the long side, it's effectively the same fucking trade. So you really have to, I would say, the way you want to kind of avoid massive correlation risk is just to trade no more than 2 directionals in the same pair. So if I'm long euro pound and I'm long euro dollar, maybe I do euro Aussie and that's it. Like I don't do more than 3 of the same. It's effectively the same trade. So you don't want to replicate it more than 3 times. You're going to resolve them. They're all going to resolve. It's just you don't want to be like, level 3 on three trades that are negative against you all because the euro fails on the bounce, right? You know what I'm saying? You don't want to be carrying more than that on your lever basis. But other than that, you use the exact same thing. 1/10 your account value, but now you just simply put the stops at 10 times your stop. So it's 100 stop, 110 target, and anything that's underneath 100, you just simply round up or round down to its whole value. So 80 cents, 88 cents, 60, 70 cents if it's 65 or higher, 90 cents, that kind of stuff. Just to give yourself the right volatility wrappers. Probably when we're talking about the pound crosses, you should follow the same methodology. So the pound Kiwi, here you have to use 200 cents and 220 cents, right? I'm not surprised. Nas is right. There's no surprise that we're at 60. I gotta go, so I'll leave you be. But you guys have a great time. Trade the lows. When it gives you a signal, it's the right thing. It's a structure for us. I'll let you trade out. If I have a chance, I'll try to trade out myself. That's all in the spreadsheet, Craig. Underscore sheet. It's all of the multiplication. All the multiplication factors are right there. Okay. All right. Everybody have a wonderful weekend, guys. Good week. Nice, clean week. I think we're doing better and better every week in terms of our. We're like at level 2s. It's fucking unheard of. We've been level 2s all week long. What was the last time we were at level 2s in resolving shit? That's just really, really good stuff. Thank you, guys. Everybody have a wonderful, wonderful day. I'll see you guys Monday.